Everything you needed to know about mortgages. A beginner's guide to home loans. Welcome to our channel. Today we're diving deep into a topic that affects millions of people around the world. Mortgages. Whether you're buying your first home, looking to refinance, or just curious about how the mortgage world works, this video is for you. We'll cover what a mortgage is, types of mortgage loans, how interest rates work, the mortgage process from start to finish, common mistakes to avoid, and insider tips to save money. Stick around, by the end of this video, you'll have the confidence to navigate the home loan process like a pro. Let's get started. What is a mortgage? A mortgage is a loan used to buy a home or property. It's one of the biggest financial commitments most people will ever make. When you get a mortgage, you're borrowing money from a lender, typically a bank or mortgage company, to pay for a home. In return, you agree to pay back the loan over time, usually with interest. But here's the catch. Until your mortgage is paid off, the lender technically owns the property. If you stop paying, they can repossess the home. This process is called foreclosure. Key terms to know. Principal, the original loan amount. Interest, the cost of borrowing the money. Term, the length of the loan, often 15 or 30 years. Amortization, how your monthly payments are split between principal and interest. Types of mortgages. There are several types of mortgage loans. Choosing the right one depends on your financial situation, goals, and risk tolerance. 1. Fixed rate mortgage. This is the most popular type. The interest rate stays the same for the entire loan term. Monthly payments are predictable. Deal for people who plan to stay in their home long term. 2. Adjustable rate mortgage, or MEAN, starts with a lower interest rate. Rate changes after a set period, i.e. 5 or 7 years. Can be risky if rates rise. Good for short-term homeowners is 3. FHA loan, backed by the Federal Housing Administration. Lower down payment, as low as 3.5%. Easier to qualify, great for first-time home buyers. 4. VA loan, for veterans, active duty military, and certain family members. No down payment required. Competitive interest rates. No private mortgage insurance, PMI. IMA, USDA loan for rural and suburban homebuyers. No down payment, income limits apply. How mortgage interest work. Your mortgage interest rate plays a huge role in how much you pay over the life of the loan. Let's say you borrow $300,000 for 30 years. At 3.5% interest, you'll pay about $185,000 in interest. At 6%, you'll pay over $347,000 in interest. That's a $162,000 difference. Fixed versus variable interest. Fixed rates don't change. Variable or adjustable rates can increase or decrease over time. APR versus interest rate. The interest rate is just the cost of borrowing. The APR includes the interest plus fees and closing costs. Always compare APRs to know the true cost. The mortgage process, step by step. Buying a home and getting a mortgage involves multiple steps. Step 1. Check your credit warrant. A higher score means better rates. 740 plus is considered excellent. Step 2. Get pre-approved. A lender checks your financials and gives you a loan estimate. This helps you know your budget. Step 3. House hunting work with a real estate agent. Stay within your pre-approved price range. Step 4. Make an offer. Submit an offer with your agent. May include negotiations. Step 5. Apply for the mortgage. Submit full documentation to the lender. Includes pay stubs, tax returns, bank statements, etc. Step 6. Home appraisal and inspection. Appraisal confirms home value, and inspection checks for problems. Step 7. Underwriting. The lender reviews your file in detail, approves or denies the loan. Step 8. Closing. You sign the paperwork, pay closing costs, get the keys to your new home. Down payments and PMI. Down payment, typically 3% to 20% of the home price. Bigger down payment, smaller loan, plus less interest. PMI, private mortgage insurance required. If you put down less than 20%, protects the lender. Can cost $30, $100 plus per month. Can be removed once you reach 20% equity. Common mortgage mistakes to avoid. 1. Not shopping around. Compare multiple lenders to get the best rate. 2. Ignoring the APR, it shows the total cost of the loan. Overborrowing. Don't max out your budget. Leave room for property taxes, repairs, emergencies. 4. Quitting your job before closing. Lenders recheck employment before final approval. Forgetting closing costs, usually 2% of the home's price. Plan ahead. Tips to save money on your mortgage. Prove your credit score before applying. Make extra payments on your principal. Refinance if rates drop. Avoid PMI with a bigger down payment. Buy points to lower your interest rate. Consider a shorter loan term, like 15 years, to save on interest should you refinance your mortgage. Refinancing me.